So on the public sector auditing, and your 20 marks. Public sector auditing, you cannot do away with that 20 marks. So we'll go there, then we'll talk briefly about it, then we'll end the class. So today, I won't take much of your time today. So we will only do at least 3 or 4 questions on the audit of historical financial statements. Then we'll move to the public sector. The public sector, too, I don't have any question in my document, but we will just talk about it briefly. Then we'll end the class there. So today, at least 2 hours should be enough. 2 hours should be enough. Because we have done a lot. On advanced audit and assurance, we have covered a lot. We have done what you need to know before you sit for the exam. So we will take question 10. We will take question 10. Then we will do question 10. Question 10. While we are done with question 10, let me see. Then we do one question on review, subsequent events. Which question again on subsequent events? Let me see. Yes, question 13 on subsequent events. Very, very important. On subsequent events. Then we'll do 1, 2 on reporting. Let me see if I have any question on reporting again. Yes, this question is on reporting. Question 14 is on reporting. But let me see if you have any other question on reporting. Yes. We will also look at question 17. Yes. Question 17. Let's do the question 17 first. Let's do the question 17 first. There are some issues of controls, issues of procedures, and audit evidence, issues of accession. Yeah, there are issues of accessions in question 17. Let's discuss question 17. So let's do the question 17 first. Let's do the 17 first. So let's start. I believe Auntie Agnes is on the call. So if you are here, and today is Sunday, so you cannot tell me you are on the way going somewhere or not. So kindly take the question 17 for us so that we do justice to it and move forward. Auntie Agnes, if you're yes, I can see your name here.
Okay. Question 17.
But but before we move on, if you have any question you want to ask, you can ask before we move on. And even if you are not able to ask now, during the course of the class, you can still ask. So Auntie Agnes, read the question 17 for us. Let's go.
All right. You are the audit manager responsible for the audit of Meg's Chops Limited, a company that runs a chain of fast food restaurants. You are aware that a major risk of this sector is that poor food quality might result in damages claimed by customers. You had satisfied yourself at the interim audit that the company's control risk as regards purchases of food and its preparation in the kitchen was low. However, during your final audit, it comes to your attention that 1 month before the year end, a customer has sued the company for personal injury caused by food poisoning, claiming an amount of 100,000 Ghana cedis in compensation. This amount is material to the stated profits of the company, but management believes that it has good defenses against the claim. Required. A. Recommend 2 controls that the company should have in place to reduce the risk associated with food purchases and their preparation in the kitchen. II. states 2 audit procedures you should carry out during controls testing to satisfy yourself that control risk in this area is low. B. Explain 2 assertions relevant to accounts payable at the year-end date. C. In respect of the potential claim, state 3 items of evidence you should obtain and explain how they might enable you to form a conclusion on the likelihood of the claim being successful.
Okay, thank you very much. Thank you very much. So this question is on a company that runs what? A chain of fast food restaurant. One way to answer advanced audit and assurance question successfully is for you to understand the question and know the area, the industry that the company in question, the industry that the person is operating. So this one, Meg's job is into a restaurant. So they run a chain of fast food. Now, in the question, you were told that the major risk in this sector is poor food quality that might result in damages claimed by customers. So this should be telling you what kind of controls that mega shops should put in place to mitigate against the poor quality of food that may result in damages claimed by customers. Now, you were told that during the year and before from here, however, during your final audit, it comes to your attention that 1 month before the year end, 1 month before the year end. So that means this event falls within what? Within the accounting period. 1 year before, 1 month before the year end. A customer has sued the company for personal injury caused by food poisoning. So the customer is claiming 1,000 Ghana cedis as compensation. But you see, these people, they will be too known. They say what? They are even telling that the amount is material. It's material to the stated profit of the company. But management is saying what? They believe that they had a good defense against the claim. They had a good defense against the claim. So in that case, management, they are thinking that so far they have a good defense against the claim, even though the amount is material to the financial state, to the stated profit, they may not try to make a provision towards it, or they will not even try to recognize it in their financial statement. Now, let's see what you are required to do, what is expected of you to do. So the first one for 2 marks, you are to recommend controls that the company should have put in place to reduce the risk with food purchases and the preparation in the kitchen. Now, if you see, anytime you see controls, recommend controls, what should come to your mind?
Stop spam.
So spam should click in your mind. So spam should click in your mind. So what are some of the controls that management of mega shops should put in place? What will be some of the appropriate controls? Any of the abbreviation can work. Just link it to the keys, just link it to the company. You are good to go. Any of them can work. But just try to link it to the company. You will get your 2 marks. Just 2. So what should be the first control?
Segregation of duty.
So there should be segregation of duty. How will you expatiate it? How will you explain it? Well, if you just say segregation of duty, I'm not sure you even get half mark. No. You should be able at least link it to the case. They say the controls that the companies have to put in place to reduce the risk. So if fine, there should be segregation of duty. So how will you link it to the case?
When it comes to the preparation of the food,
Okay.
those preparing the food are supposed to be separated from those that will be actually handling the food stuff for the preparation of the food.
Okay. That's very good. So it means that even from the purchasing down to the kitchen, you see, from the purchasing, somebody should be there. Those that to purchase the ingredients should be different from those that will be working in the kitchen. So there should be clear line of duty, clear cut of duties. Eh? So that's very good. What other one? The O stands for what? The O stands for what? Organizational control. Yeah. So how will you link the organizational control to the case?
There must be a reporting structure.
Okay.
Yes, within the organization,
Okay.
where maybe those who will be preparing the food or those who will be doing the cleaning must be reporting to a particular person.
Okay.
There must be a structure.
All right.
So that nobody will just get up and do whatever pleases you within the organization.
So that chain of command must be there. Is that not it?
Yes, exactly.
Aha, good. Then the A stands for what? What is it? Is it
Authorization.
authorization? So someone must be there to authorize the items they buy. Before they buy anything, someone must be there, must verify the thing and authorize them from the ingredients, even after preparation, somebody should come and test the food. So likewise, supervision to be there. So it should be what? Constant supervision. Okay. Let's go to the next one. You are to state 2 audit procedures that you carried out during control testing to satisfy yourself that the control risk in this area is low. So what audit procedures will you perform for you to be sure that the controls that the company have the controls are working? The controls are working in order to mitigate against the risk. So what procedures will you carry out?
So one of the audit procedures will be observation.
Should be what?
Observation.
Okay. All right.
So,
but before you answer that question, if you see, anytime you see audit procedures, you are doing general revision. So anytime you see audit procedures, what should come to your mind? The action words, is that not it?
yeah.
So what are some of the words that you use? What are some of the verbs that you use? So you review. Can I use review? You review, you observe.
Yeah, observation.
You
You make
observe.
inquiries.
You can make inquiries, you can inspect.
Inspect.
Uh-huh.
And you can the one that the auditor himself would want to do by himself. Is it to redo or something?
Reperform.
Reperform. Thank you.
Reperformance. But in the kitchen, are you going to recook the food?
But in this case, the auditor cannot cook.
You can do what? Analytical review. Analytical review. So anytime you see you recommend audit procedures, start with any of these words and review this document, inspect this, observe this. Normally you inspect what? Object, you inspect. So if it is inventory, you can inspect the inventory count. You can observe how the inventory process, the counting process is done. But this one, how are you what are you going to do? So my boss, Nathaniel, you started saying something first before I interrupt.
Observation.
So
Yeah.
you observe what?
Yeah. So maybe one of the days, maybe prior to the end of the audit, or before the audit, the auditor can just pass by just to observe how they prepare their food, where they purchase their food, what are some of the things that they do to make sure that they use best practices.
Okay. All right. So that is one. What are other procedures will you carry out? Can you review their documents, their purchase, their document relation to their suppliers, their purchase order, and see they are actually buying the thing from genuine customers. Their suppliers have the required document to supply the ingredients. Can you do that?
Yeah.
So that you check their invoices.
Auntie Jennifer, you say what?
Can maybe checking of the invoices regarding
Yes.
the item.
Exactly. Regarding the items that they bought, checking their suppliers correspondence to see that whatever they have ordered is the same quality that the suppliers have been supplying to them. All right. So the next one, C. No, that is B. You are to state 2 assertions relevant to account payables. Okay. Audit assertions. If you hear assertions, audit approach. What are some of the audit approach that you know?
Risk-based.
We have risk-based approach.
We have balance sheet.
And the risk-based approach is the default one.
Yes.
Every audit you are going to conduct, you must do risk assessment based on the risk identified. Then you do what? You select your method. So you have which one again? You have balance what?
Yeah, balance sheet.
Balance sheet approach is also known as what?
Account balances.
Account balances. Account balancing. Then we have which one again?
We have the test of details. That's the substantial testing.
Test of details.
Yes.
So this one is the substantive approach. Is that it?
Yes.
So
we are looking at transactions and events.
Substantive approach. So this one is also known as what? Assertions. Is that not it?
Yes.
It's also known as assertions. Then we have which one again? We have the substantive test approach. The one that talks about the controls. How do you call that one? The one that talks about the tone, the control environment. How do you call that one?
Is it the system-based audit?
System-based approach, yeah. System-based approach. Auntie Doris, you are giving us feedback. System-based approach. This one talks about what? The internal controls. Is that not it? The internal controls. The tone at the top. What are the attitudes of management towards the control environment? Okay. So assertions. Assertions, we have established that assertions is about the substantive testing. So let's revise before something more. Let me go here. Senior Dominic, we can hear you. Yeah, Dominic, we can hear you. Kindly mute your mic for us, please. Let's revise small. Let's revise something small. The assertions. I hope my screen is showing.
Yes, please.
Okay. The assertions, which is the substantive test. Substantive testing. Equally known as what? Test of details. We do assertions at what levels? So we do what we call account balances. Account balances, we do it for what? Which statement of which account? What's the second one?
Financial position.
So we do account balances for statement of financial position. Is that not it?
Yeah.
So what are the things you are looking for? So what are the things you are looking for when you are doing the assertions on the statement of financial position items?
With cutoff point.
Okay, so you check the cutoff. Cutoff, what does it mean? So you check the transactions for within what?
Within the accounting period.
In the accounting period. Then you do what? You check what again? Right and obligation. Is it for statement of financial position items?
Yes.
Yeah.
So what are you checking here? Right and obligation. What are you doing? So here you are going statement of financial position items.
Assets.
Assets. Whether
they actually belong to the organization.
Yeah.
All right. Okay. Then and liabilities.
Yeah.
Liability is the obligation. What are you doing? You are
Also checking to see if they have any present obligation.
To what? To recognize the liabilities in their statement of financial position. Is that
Yeah.
right? Good.
Yeah.
Then what again?
You have the existence.
The existence. Existence, what are you looking for? Or what are you looking at?
Whether the assets are there.
There, yeah.
Okay, then what
Whether
again? Is valuation here?
Valuation.
Yeah.
Yes, valuation and allocation.
Valuation and allocation.
And allocation, okay. Then what about completeness? Or completeness is for P or L. Is it for P or L or is it also here?
No, it's the account.
It's for both.
It's for both.
Yeah.
Yes.
Completeness. Okay, let's move on to but I believe there are some other ones again. Then let's go to you do transactions. Transactions and events. This one I do it for P or L items. Good. So what are you checking?
Checking
The same cutoff.
We are checking the same cutoff. Okay.
Checking occurrence.
Occurrence. Okay.
Same completeness.
Accuracy. Do you have accuracy as
Accuracy. Yes.
The completeness.
Then we have classification.
You have classification. Good. Thank you very much. Now let's go back to our question. Thank you for that quick revision. Let's go back to our question. So we are asked to explain two assertions in relation to account payables. So what are you going to do? This one alone is 4 marks. Okay, I believe you know what to write over there. Good. We just look at them. Then the next one, you have to, in respect of the potential claim, the claim is 1,000 Ghana cedis, 100,000 Ghana cedis. And we were told that the claim is material to the financial statement. So in relation to that claim by that particular customer, you have to state 3 items of evidence you should obtain and explain how they might enable you to form a conclusion on the likelihood of the claim being successful. So what are the evidences that you should be expecting in relation to the claim? What evidences will you be looking at as an auditor?
I think first, one of the evidence should be the official report from the customer.
What report?
Official, as in official complaint letter, or being it either written or either type or either invoice note.
Okay. Okay. From the customer.
From the customer.
Okay. So how would that enable you to form a conclusion that the claim will be successful? Likelihood on the claim be successful.
So that's the first or one of the evidence.
Okay.
Just to show that it is not something that management is just stories that management is putting together.
Okay.
It is the actual case that yes, indeed, these are the evidence or witnesses or regarding this. So I think that will be the first one. Then the other one would be maybe court letter. There's from the court.
The other one is what?
That shows that.
The other one is which letter?
No, like I'm saying court.
As the customer taking the company to court. Okay, sued the company, yes.
Yes, sued, yes.
Yes. So the court document. So just make it a copy of the court document.
A copy, yeah.
You see, evidences are copies. Evidences are.
Yeah, copies. Okay.
So if you see evidences, just start copy of this, copy.
Okay.
Then I think that will do for me. So copy of the court document, yes.
Yeah.
What again? Can you equally get a copy of the medical reports of the customer actually satisfying that he has actually suffered the food poisoning? I think that should also do. Is that what it is?
Yeah.
Copy of the medical report. Definitely, if you suffer food poisoning, you should go to hospital. So the medical report should be there. You get that copy and put on file.
Yeah.
The default one is what? The one I told you, if you are handicapped, then you can that one write it.
Obtain written representation. A copy of.
So, get that one, written representation. Get that one from management, stating their stand on the issue. In that written representation, they will state their stand on the keys. So that one, this if you are handicapped, add it. Get that one and put on file. Okay. Yes, I. Yeah, Mr. Christian.
With the procedure, can you write the written? Can you write the written representation from the management? Can you include that one too?
Oh, yes. Yes, you can include it. So you can the procedure. You see the way you put you say hold a discussion. Hey, I didn't add that one. Hold discussion with management to obtain what written representation concerning the case. Are you okay, senior? So hold discussion, discuss it with management. The audit procedure, discuss it with management, then you obtain the written representation on their controls that they have in place regarding the purchase of food and the preparation of the food. Discussing with management there is very, very key, very, very key. So if you hold that discussion, you can get minutes of that discussion, the minutes of the meeting, the written copy of the written representation, and the rest. So let's move on to. So I just want to use this one to refresh our mind, to revise something small. So let me go to question. Let's do question 13. No, let's do 8 first before we do 13. So let's do one question on the standards. Then we'll do the 13, which is on subsequent events. Then we'll do one on audit reporting. Then we are done. So let's do question 10. Auntie Agnes.
Yes, sir.
All right, read the question 10 for us.
Okay. You are the audit manager of Onipa Hia and Co., a local firm of chartered accountants located in Adabraka in the Greater Accra region. You are currently reviewing the audit files for several of your clients for which the audit field work is complete. The audit senior has raised the following issues. African Designs Co. Limited. ADCL's year-end is 30th September. However, subsequent to the year-end, the company's sales ledger has been corrupted by a computer virus. ADCL's finance director was able to produce the financial statements prior to this occurring. However, the audit team has been unable to assess the sales ledger to undertake detailed testing of revenue or year-end receivables. All other accounting records are unaffected, and there are no backups available for the sales ledger. ADCL's revenue is 15.6 million Ghana cedis. Its receivables are 3.4 million Ghana cedis, and profits before tax is 2 million Ghana cedis. Ghana Design Co. Please, should I continue?
Wait, let's digest this one first. Let's digest this one first. So this one, the audit manager, you say you are currently reviewing the audit file for several of your clients. So it is not for only one client. These people, they are Onipa here and Co. They need money, so they are doing several works at the same time. So for which the audit field work is complete. So the field work is done. So they are now reviewing the working papers before they will finally issue their audit report. Good. So in relation to Africa Design School Limited, their year end is 30th September. Okay, so their financial year end is 30th September. In auditing exam, be taking note of the dates and every word in the question. The dates are very, very important. If you are not careful with the dates, you'll be writing something else, something which will not be in line with the question. Now, however, subsequent to the year end, that may be before 30th September, the company's sales ledger has been corrupted by computer virus. So that means they don't even have, they don't even have a good preventive mechanisms in place to prevent virus from attacking their sales ledger. It means they are using some form of accounting software. Now, the finance director was able to produce the financial statements before the incident occurred. Okay. Now, the audit team has been unable to assess the sales ledger to undertake detailed testing of the year-end receivables. So here, the issue in question is the receivables. It's because of the corruption of the sales ledger. So the issue, the main topic sentence here is sentence on the receivables. All other accounting records are unaffected. So that means the issue relates to only receivables. And there are no backups available for the sales ledger to be checked. So the audit team, they don't have any other alternative to actually find out that the year-end receivables are in place. So their revenue for the year, 15.6 million. The receivables balance is 3.4, and their profits for before tax is 2 million. Good. Let's answer the question. So let's see the requirements of the question. So the first one, you have to describe, look at the word, describe the impact on the audit report if the issue remain unresolved. Then you have to recommend audit procedures. Recommend procedures the audit team should undertake at the completion stage to try to resolve the issue. So what will be the impact of the account receivable on the audit report if the auditors were not able to verify the account receivable for the year end? What will you write and get your maximum mark to pass the paper? What will you write?
Hello.
Yeah, I can hear you, Senior.
Yeah. So describe the impact on the audit report if the issues remain unresolved. In my opinion, I think that the basis of opinion in the audit report be that due to the issue that has happened by the company sales ledger being corrupted by a computer virus and the inability of auditors to also confirm those receivable balances at year end, it is pervasive, and it is also material to the financial statement. Then I will calculate the receivables on the revenue to see the materiality.
So that would be what? That would be, so are you done, Senior? Are you done?
No, so that
Okay.
would be 21.79, so 21.8%.
So materiality will be what? 3.4 over what?
15.6.
So this will give you what?
21.8%.
So it means that what?
Yeah, it is material
That
to
the
the financial
receivables is material to the
financial statement.
financial statement. Okay.
Yes. So that will be the basis of opinion, and the conclusion will be that
So what will be the opinion? What will be the opinion?
a disclaimer.
You issue a disclaimer.
Yes.
Does somebody have any objection to that opinion? Let's discuss. We are discussing. So
Because in this case, it is
wait.
It's a
material and
qualified.
pervasive.
I was
Qualified.
issue a disclaimer.
Who
No,
said you also issue a disclaimer? Yes.
Well,
Dominic.
the item is only affecting the receivable.
Okay.
It is material, but I don't think it is pervasive. So it should be except for.
Yeah, but in this case, there is limitation of scope.
Thank you.
There's limitation of scope. So
Yes,
if there's
limitation.
yeah,
But that is affecting only
Not
receivable.
validity.
Auntie Jennifer, talk. Let's listen to your point.
Only something.
Auntie Jennifer.
Sir, please, I'm saying that it's sir.
Yes, we can hear you.
Sir.
Yes.
Sir, this is William.
Yes, we can hear you.
So, sir, I'm saying that it's those limitations. It's material ban items. That's the so the opinion should be qualified opinion except for.
It should be qualified opinion except for. Okay, because it is material but not pervasive. Tina Richman, you are making a point.
There is the same thing I've said. The item, the limitation is only affecting a particular line item.
Yes.
And so it is not widespread. So it should be except for.
All right, thank you very much. Now, Senior Dominic, you were also saying something. Senior Dominic. Yes, we can hear you.
I was saying I will issue a disclaimer.
Okay.
In the sense that the context of the statement is pertaining to only one item. So I assume that it is only that item that I'm dealing with. And it is this item that I don't have documents to look through. So the only opinion I can issue is a disclaimer. So I will assume that management did not give me those documents to work with, which I am issuing the disclaimer.
Okay, Senior, hey, if you issue a disclaimer there, disclaimer means you say nothing.
Yes, because I don't really have anything to confirm whatever they've given me.
Okay, but let me.
Sorry.
That it's only.
I'm taking my disclaimer back. I've seen a sentence. If you read it, it said all other accounting records
are not affected.
I am not affected.
So I'm taking it back. So it's
I said
qualified except for.
Is it from here? All other accounting records are unaffected. You see, so my brother, disclaimer there. That means if the issue there's a limitation, it means disclaimer. Before you can issue a disclaimer, you don't have any document at all. You're not able to conduct the audit. Then in that case, you can issue a disclaimer. If let's say concerning the whole financial statement, you want information on assets, no, they didn't give you. Information on liabilities, they didn't give you. Information on receivables, they didn't give you. So that one there, you issue a disclaimer because the limitation is widely spread. You are not able to conduct the audit. Then you can issue a disclaimer. But if it is material but not pervasive, you issue qualified except for. So I agree with the people that say that the opinion should be qualified except for, because the issue is affecting only receivable. Yes.
Sir, please let me take you back small. When you say qualified except for, does it mean that all other things are okay except for that limitation that
exactly, yes. If you say qualified except for, it means that all other things in the report are correct except for only that item. So this one, if you come to the basis of opinion, then you will state it there that except for the receivables balance not being verified because of the corruption of the sales ledger, you are not able to authenticate or verify the receivables balance. Apart from that, everything is correct. It's except for only that item. So this one, the opinion should be qualified opinions except for. Okay. So what will be let's answer the B part, the second requirement on this one. Yeah, Mr. Dominic, I can hear you.
Oh, sir, I wanted to thank you. You made me realize something, which it means when I'm reading, I have to do a thorough reading. Thank you very much.
Yes. If audit question there, if you don't know you read giti, you will deviate. You will totally deviate.
It's true. It's true. Thank you very much.
So that's the reason why when they are reading, I'll be underlining some of the words. In this question, they say all other accounting records are unaffected. So if you didn't see this information and you are writing a disclaimer over the bar, senior, over the bar. So the B part, recommend procedures the audit team should undertake at the completion stage to try to resolve the issue. So what procedures will you carry out? What are some of the procedures will you perform?
So one of them will be that after the reporting period, they should confirm or they should check the bank to see if those amounts that play as receivables have been paid.
Okay. All right. So that is one. What again? Receivables, can you do direct confirmation? You can write to the company to contact those customers for you so that you can verify from them the amount. Can you do that? Can you do direct confirmation from the customers? Auntie Jennifer.
Yes.
Auntie Jennifer.
Yes, please. I mean, we can write for a confirmation. Yes, please.
Okay, all right. So that's one procedure I can do.
We can write for a confirmation. Yeah.
Okay.
From the customers to confirm.
Okay.
The
So
balances.
what else can you do? You can equally review all invoices.
You can recalculate. Check.
Okay, yes.
Invoices.
You can do recalculation.
Yeah. Analytical procedure.
Analytical procedure. You can review the invoice. If it's only the sales ledger that is corrupted, so the invoices should be on file. So you should be able to review the invoices to confirm the amount, the 100,000 amount of the receivables. Okay. So let's go to the next one. Auntie Jennifer, read the second one for us. Let's go to Ghana Design Company Limited. Auntie Jennifer, if you are reading, we cannot hear you.
Yes, sir. Sir, I can hear you.
I'm mentioning Jennifer. Auntie Agnes.
Yes, sir.
Read the second one for us. Let's see if we can digest the second one.
Okay. Ghana Design Co. Limited, GDCL, has experienced difficult trading conditions, and as a result, it has lost significant market shares. The cash flow forecast has been reviewed during the audit fieldwork, and it shows a significant net cash outflow. Management is confident that further funding can be obtained, and so have prepared the financial statements on a going concern basis with no additional disclosures. The audit senior is highly skeptical about this. The prior year financial statements showed a profit before tax of 1.2 million Ghana cedis. However, the current year loss before tax is 4.4 million Ghana cedis, and the forecast net cash outflow for the next 12 months is 3.2 million Ghana cedis.
So you have to describe the impact on the audit report if the issue remains unresolved. Now, this question, Ghana Design Co., they are experiencing difficult trading conditions. So because of that, they has lost significant market share. Their net cash flow forecast, has been reviewed during the audit fieldwork, and it shows a significant net cash outflows. Significant net cash outflows. The management is confident that further funding sources can be obtained So even though they are having difficult trading conditions and their cash flow forecast is showing a significant net cash outflow, they are confident that they will have another or they will have different funding sources. So they have prepared the financial statements based on the going concern basis. So this question, the main idea here is the going concern. The question the examiner is trying to test the candidate's understanding on the going concern. The company is having a significant cash flow challenge. Even the company is having a significant cash flow challenge. So for the current year, they make a loss. So for the current year, which is, okay, we are not giving the year, but for their current year of, for their current accounting year, they make a loss of 4.4 million. Even though last year, they make a profit of 1.2 million. See, from profit reduced from 1.2 down to 4.4 loss. That means there's something going on. Because of the loss of the market share, that means they're having a serious cash flow problem. They're having a liquidation challenge. So management, they are confident that they will have another funding source. Because of that, they prepared their financial statement based on the going concern basis with no additional disclosures. You see, in their financial statement, they didn't even disclose the further funding sources that they are confident they will get. They should have disclosed it in the financial statement, which will make the auditors to do their procedures, get sufficient and appropriate audit evidence, and believe that, okay, the use of the going concern basis is appropriate. But they didn't even disclose the additional funding sources. They did not even disclose in the financial statement. So because based on that, the audit senior is highly skeptical. So one area that you should exercise a professional skepticism is the issues of going concern. It's very, very important. The issues of going concern is very, very important. So you are asked to describe the impact on the audit report if the issue remains unresolved. So what will be your impact on the audit report? What will you write? It's like I've even answered the question already, but just that I did not even state the impact on the audit report. The use of the going concern basis in the financial statement, is it appropriate?
No, it's not. So the auditor should qualify his opinion, because once the use of going concern is appropriate, then there should be a disclosure. But in this case, it is inappropriate, and there are no disclosure to that effect.
Okay, so the use of the going concern basis is not. Mr. Robert, you are giving feedback. All right, thank you very much. So the use of the going concern basis in this case by management of Ghana Design Co. is not appropriate, because if you are having a net cash flow problems and you are preparing your financial statement on the assumption that the entity will continue to live into the future for the foreseeable period, it's a problem. It's not appropriate. One thing too is they should have disclosed what the other sources that they think they will get finance from. They should have disclosed it in the financial statement. So for them not disclosing the further sources of funding in the financial statement, it means that the use of the going concern basis is not appropriate. So the auditor should what? Should qualify what the audit report. So the report should be.
Hello.
Yes,
so Celia,
yes, I
want to find out. So with regard to this very particular question, should the auditor introduce the ISA 570 materiality related to going concern?
Yeah, it's a 570.
before the key audit matters, when he's preparing his audit report.
Oh,
is
yes.
that the case?
Yeah, that's the case. But this company, if it is a listed company, then the key audit matters will come. But we are not told that they are listed entities. So I just want to address the key audit matters that you have said.
Oh, okay.
This company, it's a design company. We are not told that they are listed. So if like they are listed, then key audit matters will come in there.
So meaning you just need to introduce the ISA 570 materiality related to
material uncertainty relating to going concern.
Okay.
So you only introduce this paragraph. You will not even introduce emphasis of the matter.
Emphasis of the matter. Okay.
You will not introduce that.
Okay.
You will not introduce that. You only introduce ISA 570 material uncertainty related to going concern.
Going concern.
Okay.
All right.
So you qualify the report. So it means that the financial statement is not true and fair. Is that not it? You qualify the report. It means that the financial statement is not true and fair. It's not true and fair. You look at it. They are even make the current year the loss. They make a loss of 4.4 million. Last year they have made what? They made a profit of 1.2 million. This year they are making a loss. That should tell you that no, they are not able to disclose the other funding sources. The use of the going concern basis in the financial statement is not appropriate. So you qualify the report and what? Under the basis of your opinion, they introduce material uncertainty relating to going concern. That one comes immediately after the basis for the opinion. So you have your opinion, your opinion paragraph will come. Then you bring your basis for the opinion. Then you introduce what is a 570 material uncertainty relating to going concern. So what are the procedures you perform? So the B part, the procedures you perform in relating to the funding sources that they say they have. What are the procedures you perform?
Use the default one.
That should be the first one. If you have issues concerning going concern, if you have going concern issues, the first one should be you hold discussion with management on the use of the going concern. Why is it that? Why are they using the going concern basis? So you hold discussion with them. So once you do that, then you get the evidence will be copies of the minutes, then you obtain presentation.
Okay.
So you can also what else can you do? What else can you do? Because this one, everything will be relating to management. Everything will be relating to management. So you hold discussion with them, discuss with them, and understand the reason why they are using the going concern basis. Then you also discuss with them to what? To disclose to you the further funding sources. The further funding sources that they think they will get. So in the discussion, you should what? They should give you the further funding sources. Then if they're able to give you the further funding sources, then what you do is you talk, you communicate with those people. So if like they will say they will take additional bank loan, you have to what? You have to have a meeting with the bank to find out whether they will be willing to give the additional loan to the company. Whether they'll be willing to give the additional loan to the company. It could also mean that they have taken a loan that they are not even able to pay because they are facing liquidity challenges. So if the further funding source they are talking is a bank loan, go to the bank, discuss with the bank, and see whether if they will be willing to give the further loan to the company. Any question? I believe.
Sir,
yes, sir.
Yes, sir. My problem is the question that my colleagues asked about the basis of opinion. So as part of your answering the question, are you going to state the basis of opinion?
No. You only state the opinion. Can you hear me, senior?
Yes, sir.
They say you should what? You should describe the impact on the audit report. What will be the impact of the issue on the audit report? So the audit report, it means that if the issue is there, they say if the issue remains unresolved, so if they are not able to disclose to you the other funding sources, what will be the effect of it on your report? So the first effect will be the opinion. It will affect your opinion. Are you getting it? It will affect your opinion. Then you state the opinion that you issue. So the opinion should be what? You should qualify the report. Just say that the report should be qualified. It means that the report is not true and fair. Then you will still talk. You will still go further. So that in the report, the auditor should introduce what? ISA 570, material uncertainty relating to going concern. So under that paragraph, you say that management is using the going concern basis, but they are not able to disclose the further funding sources that they think that they will get in the financial statement. So you introduce that one to the audit report. So you look at the issue. What effect will the issue have on the audit report? Then you state it. Immediately you state the opinion. The next thing that will follow is the basis of the opinion. That one you don't even talk about it. It's the opinion and the issue. If the issue will affect any other paragraph, then you bring that one too. Is that okay, Senior?
Yes, sir.
All right. So let's move on. Let's do question. Let's do one question yes, let's do question 13 on subsequent events. Then when we are done, we do one question on audit reporting. Then we'll be good to go. Auntie Agi, kindly read the question 13 for us.
Question 13. Aseda Manufacturer Limited is one of the established businesses in the manufacturing sector. The company has received different awards over the past decade. Aseda's year-end was 30th September 2020. The audit of Aseda is nearly complete, and the financial statements and the audit reports are due to be signed in a few days. However, the following additional information on two material events has just been presented to the auditor on 3rd December 2020. Event 1. This event occurred on 10th November 2020. Production at the Aluta factory was halted for 1 day when a truck carrying dye used in coloring the fabric on mattresses reversed into a metal pylon, crashing the vehicle and causing a dye to spread across the factory premises and into a local river. The Environmental Protection Agency of Ghana is currently considering whether the release of the dye was in breach of environmental legislation. The company's insurers have not yet commented on the event.
Okay, let's discuss the event 1. So
Okay.
let's see the requirements. So the first requirement, you have to explain the reporting implication. So explain of the issue in accordance with IAS 10 events after reporting period. And explain the auditor's responsibility and the audit procedures that the auditor should carry out in accordance with ISA 560 subsequent events. So what is the reporting implication of the first event? So let's discuss it. Let's discuss the event and see what they are talking about. Now, what is the financial year ends for Aseda Manufacturing Company Limited? 30th September. That is their financial year end. So you have to take note of that. When it comes to subsequent events, it's 560. You must take note of date. Okay. So their financial year end is on this September 30th. Good. So during the review, these two material events has been brought to the attention of the senior auditor on 3rd on 3rd December. On 3rd December. On 3rd December. It was on 3rd December before the auditor was presented with these two events. The first event, we are told that the first event occurred on 10th November 2020. So this one, what can you say about it? Now, let's do some quick revision here. Under IAS 10, events after reporting period. How many types of events do we have?
2.
So they are what?
Adjusting and
You have adjusting
and
and
non-adjusting.
non-adjusting. So which events are the adjusting events? Which of the events that required the financial statement to be adjusted?
Adjusting event.
Okay, fine. So let's do it this way. Now,
Okay, within the accounting for the end of the accounting period. That's the adjusting.
When the event did what?
The events
Occurred in the accounting year.
It occurred within the
in the
accounting period.
Yes, please.
And what? I want what the standard says.
And before the financial report was issued.
Okay, fraud.
So when
who is speaking? This one I will not talk. I will not say shishi. Whatever you say, that is it.
So regarding the IAS 10, when the condition for which the financial statement need to be adjusted happened before, there is the condition that give an indicator before the reporting date. That very event needs to be adjusted in the financial statement. However, if the condition for which that very event, the condition happened after the reporting date, then you don't have to adjust the financial statement. So example could be that maybe before the reporting period, there was a customer declared bankruptcy. So there was a condition of which that very customer showed that he's going through difficult times before the financial. So if after the reporting date he declares bankruptcy, that condition already existed before the end of the reporting date. So in that case, that very event is adjusting. So it's based on the conditions. Yeah, that's what the standard says. I understand.
Okay. So wait, I want to go to that. Let me see if I'll get it. Good. I hope my screen is showing. I hope you guys can see my screen.
Yes.
Yes, yes, sir.
Okay.
Yes.
So IAS 10, you see. So the purpose of IAS 10 is to what? Purpose of IAS 10, events after reporting period. So there are two main objectives. There are two main objectives. But that's what our senior just elaborated on. So that is it. But I just want to show you guys something small, then we move forward. So there are two types of events. So we have the adjusting event, and then we have the non-adjusting event. The adjusting events, these are events that provide evidence of conditions that already existed at the end of the reporting period. So the events, the evidence was there before the financial year ends. The non-adjusting event, there are these events that have not occurred due to the condition arising after the reporting period. So this one, the event occurred after the reporting period. So this one does not cause the financial statement to be adjusted. Does not cause the financial statement to be adjusted. Adjusting event, you have to go back and adjust the financial statement. So in case of the non-adjusting event, if the issue is material, then a disclosure. Even if it is not a disclosure to the financial statement, will be appropriate. So the non-adjusting event, a disclosure is required by the standard to be made in the financial statement. Good. So the standard gives some examples of adjusting event. So the settlement after the reporting period of a court case confirming that the entity had a present obligation at the end of the reporting period as a consequence of a case. So court issues, court settlement. The court case has occurred before the financial year end. But if the settlement comes after the reporting period, the condition is already there. The condition is the court case is already there before the year ends. So the financial statement must be adjusted. The receipt of information after the reporting period, the determination after the reporting period of the valuation of assets, discovery of fraud, error, that were shown in the financial statement. The non-adjusting event, the standard gave the following event: a fall in value of an asset after the reporting period, such as a large fall in the market value of some investment owned by the entity between the end of the reporting period and the day the financial statements are authorized. So if there is a fall in value of an asset, the fall in value, there's no condition that was, even though the asset was there, but as at the end of the year, the carrying value of the asset will still be the same. It is after the reporting period before the value falls. So that one, you only disclose it in the note to the financial statement. You don't adjust the value, the carrying value of that asset. You don't do that one. Acquisition of or disposal of a major subsidiary. If the acquisition or the disposal occurred after the reporting period, you only disclose it to the what? You only disclose it as a note to the financial statement. You don't what? You don't consolidate. You don't consolidate because the acquisition was the acquisition occurred after the reporting period. The formal announcement of a plan to discontinue major operation, announcing or commencing the implementation of a major restructuring. Now, let's look at what does the ISA 566 about the responsibilities of the auditor. So you, the auditor, this area, you must be very, very skeptical when you come to subsequent events. So there are two key dates after the reporting period, two key dates. I mean, the date of the audit report and the date that the financial statements are issued. So if you come to the responsibility of the auditor, there are two dates you must take note of. The first one is the date of the audit report, the date you sign the audit report, and the date that the report is actually issued. I believe there are two different dates. Are there two different dates? Let's move on, because you may sign the audit report on, let's say you sign the audit report on, let's say 3rd January, the following year, so 2022. When the report is signed, the report have to go through the annual AGM, the annual general meeting. The report will be discussed by the shareholders before it will actually be issued to the public domain. So during that date, the date that you sign the report to the date that the report will be given out to the report to be issued, the auditor, you have some responsibilities. So before the issue of the audit report, before the report is issued, the auditor should actively look for what? Significant subsequent events. Before the report is issued, before the report is given out. It means you may have signed the report, but the report is not yet issued. So before the report is actually given out to the public domain, you have the responsibility to what? To look for significant subsequent events that will occur within that period. Now, so at this stage, we said the auditor have what? Have active. auditor have active stand because you have to actively look for subsequent events. So you have active stand. But after you have or you issue the report, after you have issued the report, and up to the time that the financial statements are issued, the auditor has to consider the impact of any subsequent event that come to his attention. However, he does not have to look for this event. So after you have signed the report, and after the report will be given out to the general public, or when the report is already given out to the general public, you don't have to do anything again. So you have passive stand. But if any event is brought to your attention, you can consider the impact of it. And if the impact is significant, you can go back, discuss with management what will be their stance on it. And if because you already issued the report, if management say, okay, we will not consider it, there is nothing you can do because you have what? Issued, the report has already been issued already. The reporter. So at this stage, you said the auditor have what? Passive stand. But before the report is issued, you have what? You have active stand. You have to significantly look for subsequent events. But after the report is issued, you have passive stand. So take note of that. Now, what are the procedures that the auditor you can carry out? So procedures aimed specifically at identifying subsequent events. The procedures are here, but there is something I want to draw your attention to. Where is that? Let me come here. There's something I want to show you. Okay, facts discovered after the financial statement have been issued. So after the financial statement have been issued and these issues have occurred, what can the auditor do? So if the auditor becomes aware of any fact, had it been known to him at the date of his audit report, may have caused the auditor to amend the audit report. Then you should do what? You should discuss the matter with management, determine how the financial statement need amending, and inquire how management intend to address the matter in the financial statement. Now, if the financial statements are amended, you see, this one is talking about what? After the report is already issued, but some issue has been brought to your attention, some significant matter has been brought to your attention. And you realize that, okay, if this issue be known to you before you actually sign your report, that your opinion will have been different. Your opinion will have been amended. What you have to do is you should have discuss the issue with management. Then you tell management the kind of amendments that need to be done in the financial statement. Then you inquire from management what is their matter, how do they want to address the matter in the financial statement. So if the financial statements are amended, if the management say, okay, fine, we will amend the financial statement, then the auditor have to carry out the necessary audit procedures on the amendment. Then you have to extend your review of subsequent up to the dates of the new report, because this one, the old report will be withdrawn. A new report have to be issued now. So you have to look for any subsequent event up to the date that the new report will be signed. Then you have to review the step taken by management to inform anyone who received the original financial statement and the audit report. So the old report has already been given out. So if the old report will be amended, a new report will be issued now. So you have to review, discuss with management the steps that they will take to inform those that have received the old report already, and the communications that they'll be making to those people. Management must have everything possible to retrieve those old reports before the new ones should be given out. Now, if the issue should require management's attention, that they must amend the financial statement, but management do not amend the financial statement, these are the actions the auditor have to take. So if the audit report has not yet been provided to the entity, you modify your opinion. Now, if the report has been provided to the entity, you have to instruct management not to issue the report before the necessary amendment. And if they do, you take any appropriate action. You can take any legal action against them. And you can subsequently require to speak. You can require to speak at the annual general meeting. You will speak to the shareholders yourself. So let's go to the question we are reviewing. Any question? If you have any question, you can bring it on. Then we move forward. If no question, let's move on. So the event that occurred on 10th November 2020, is it an adjusting event? Is it an adjusting event? I hope my mic is on.
Yes, sir.
Okay, so the
It's
event
a non-adjusting event.
is a non-adjusting event. It's a non-adjusting event.
Is it?
So what should be done? So according to
Since you are not adjusting, you make a disclosure.
Auntie Jennifer, you say what?
So, it's a non-adjusting event.
Uh-huh.
So you make a disclosure.
So
If the issue will affect the financial statement, you make a disclosure.
okay, all right. So the issue is a non-adjusting event, and the disclosure should be made in the financial statement. Okay. Then, okay, let's move on. The issue explain the auditor's responsibility and the audit procedures that should be carried out in accordance with ISA 560 subsequent events. So what should the auditor do here? So I just gave you the auditor's responsibility. So what should you as the auditor, what will you do? Mr. Emmanuel, we cannot hear you, please. Mr. Emmanuel Atta, you were saying something, but I can hardly hear you.
Yeah, the auditor should know the nature of the effect and estimate the financial effect, and should make there should be non-adjusting events.
Okay, so the disclosure requirement, what and what should be disclosed in the financial statement? It's the standards states how the disclosure should be made. Is that not it? So first one, the disclosure should talk about the nature of the event. Is that not it?
Yeah.
What again? The nature of the event.
And should also disclose the financial effect.
The financial effect.
Yeah.
Of the event.
Yeah.
Okay. So the auditors have to do what? So what are the audit procedures? What procedures will the auditor carry out? We know the issue is a non-adjusting event. All that we are talking about, the financial statement, according to IAS 10, the issue is a non-adjusting event because what even happened? They said one day when the truck carrying the dye used in coloring the fabric on mathematics reversed into a metal parallel, crashing the vehicle and causing a dye to spread across the factory premises and into a local river. Okay, so the car crashing the vehicle and causing the dye to be released was not there. There was no evidence that existed before the financial year end because this actually occurred on 10th November. The financial year ends on 30th September. So there was no condition that existed before 30th September 2020. So the issue should be disclosed. The financial statement does not need to be amended. The issue should be disclosed. So the nature of the event and any financial effect that it will have on the financial statement should be disclosed as a note to the financial statement. So what audit procedures would the auditor carry out? Look at the second part here. The EPA of Ghana is currently considering whether the release of the dye was in breach of environmental legislation. So the company's insurers have not yet commented on the event. So what procedures would the auditor carry out? Let's flow fast so that we can.
Have to check if there's a breach, if there's a legislation. Check the environmental legislation maybe the company have in place regarding such issues.
Okay.
Whether there's some legislation like that, since the EPA is asking, is saying there's a breach, so you have to know whether there's a document to check it.
Okay, good. So you can review their environmental protection documents, their environmental protection policies, you can review it and get correspondence from the EPA. Good. So what else will you do? The simple one, the basic one is there. I think there are two. They are there.
It should also inquire whether the company has a valid insurance certificate.
Policy. Exactly.
Yes.
Yes. Then you should do what again? What else should the auditor?
To check the board minutes.
You check the board minutes. You should review the board minutes. That the incident that has happened, what the meetings they had, what was their decision. So you should review their board minutes.
Yeah.
Yes. You should obtain written representation concerning management stand on the issue. What is their plan? Board minutes is very, very important. You review it and see what is their discussion concerning the issue. Definitely, there may be a press release. So you should obtain the copy of the press release and see what is the public, what are they saying about the issue, because we are told that the dye was spread into a local river. So those in the community, definitely they may be affected. So the press release will also do. Good. Let's go to the second one. Auntie Agnes, read the event 2 for us.
Event 2. This event occurred on 19th October 2020. The springs in a new type of mattress have been found to be defective, making the mattress unsafe for use. There have been no sales of this mattress as it was due to be marketed in the next few weeks. The company's insurers estimate that inventory worth 600,000 Ghana cedis has been affected. The insurers also estimate that the mattresses are now only worth 100,000 Ghana cedis. No claim can be made against the supplier of the springs, as this company is in liquidation with no prospect of any amount being paid to third parties. The insurer will not pay a cedar for the fall in value of the inventory, as the company was underinsured. All this inventory was in the finished goods store at the end of the year, and no movements of inventory have been recorded post year end.
Okay. So this one, should the financial statement be adjusted? Based on our knowledge in IAS 10, what is the reporting implication of the second event? Should the financial statement be amended? Who is talking? Who is helping us? Yeah, Mr. Emmanuel.
It shouldn't be amended. The non-adjusting event.
It's a non-adjusting event.
Yeah.
On what basis? You have to justify your answer.
Well, because the event occurred on the 19th of October, which was after the financial statement was reported. And moreover, the inventory was insured, so which means it will not have any financial effect on the financial statement that have been prepared.
The inventory was insured, but
yeah,
they say what the insurers also estimate that the mattresses are now only 100,000 Ghana cedis. No claim can be made against the suppliers of the spring, as the company is into liquidation with no prospect of any amount being paid to any third parties. The insurers will not pay ASIDA, for the fall in the value of the inventory, as the company was what underinsured. Mr. Emmanuel, I hope you are with me.
Yes.
The company was underinsured. All of these inventories was in the finished goods stock at the end of the year, and no movement of inventory has been recorded post-year end. So your stance is what? The financial statement, will not be amended?
Yeah.
Okay. Don't worry. We will discuss it and see where we finally decide. Who else?
Yeah. Please, I think it should be adjusted because the inventory was with the company before the year end or at the year end. And that means there's a likelihood that anything can happen to the inventories.
All right.
The right is also very significant, so yeah, it should be adjusted.
Okay, so we have one adjusted and one non-adjusted. What is the condition here? What is the condition in this question? Let me ask that question first. The condition you have to note, then you decide. I'm not saying the two speakers they are wrong or wrong, but don't worry. When we finish discussing, you yourself you know the stance you take. What is the condition here? What is the thing happening to the inventory? The inventory. What is the inventory? What is the inventory here? What is it? What type of inventory is it?
It's mattress.
It's mattress. It's mattresses. Mattress. Good. It's mattress. That's the inventory here. It's mattress. What is causing the issue to the mattress? Sometimes when you're examination hall, the thing is simple, but your brain will be high. Your brain will be hot, Charlie.
The springs in the mattress.
They said the springs in the new type of mattress have been found to be what? To be defective. Making the mattress to be what? Unsafe for use. So the springs were already in the mattress. They were in the mattress. So should the closing value, the inventory value of the inventory worth 600,000 be adjusted? Be adjusted back to 100,000 Ghana cedis? Should the value, the 600,000 that was disclosed in the account, be what? Be reversed back to 100,000?
Yes, it should.
All right.
Because the event happened before the reporting date.
No, it's actually, the date is actually after. So it's 19th October. The reporting date is 30th September. The date is actually after. But if you don't know, you always want to be looking at the date. You'll be wrong. You have to look at the condition that existed. In this case, even though the event is happened on 19th October, the springs in the new mattress were there. The mattresses were already there, and the springs were also there before what the financial year ends. They were there. So it means that the financial statement must be what? Must be adjusted. the inventory value must be what? Must be reversed back to 100,000 Ghana cedis. The inventory value was overstated in the what? In the financial statement. So it must be reversed back to, it must be adjusted back to 100,000 Ghana cedis. If you look at this value definitely is to be significant to the financial statement. To be material, 600,000 will be material to what? To the financial statement. To be material to the financial statement. So the inventory value must be what? Must be adjusted back to 100,000 Ghana cedis. So what are the audit procedures that the auditor have to perform?
Sir.
Yes.
Please, I beg you, let me find out this clarification from you.
All right.
Assuming the event happened just after the financial statement was prepared or issued, but the auditor has not commenced work on it. By the time that the auditor is commencing work, he realized that there was a post-event issues.
My brother, wait. My brother, wait. Don't confuse me yet. Let's take it one. The way you are using post-event and after the event, I don't know.
Yeah, I just something is just confused. I just want to get clarification. Assuming the auditor, assuming the financial statement have been prepared.
So let's say this one. Let's say the financial year ends on 30th. Let's say 30th June. Are you with me, senior?
Yes, sir. I'm with you.
So the financial year end is 30th June. Is that not it?
Yes.
So your question is?
Financial year end 30th June. And just after 30th June, some events happened.
Just after, like, let's say, first July.
1st July or maybe 5th July.
Or 5th July.
Some events happened.
And what is the event?
Maybe there was a distraction in the factory, or there was a natural disaster that occurred.
Okay.
Natural
disaster. Let's say fire outbreak.
Fire outbreak. Very good. So my question is,
there was fire outbreak.
That one is
that caused the warehouse to be destroyed. Is that not it?
Exactly.
The fire outbreak caused the warehouse to be destroyed.
So that one is a non-adjusting event. Is that not it?
Yes, because the fire, no evidence of the fire existed before the financial year ended.
Existed. Okay.
Natural disasters are what? Are non-adjusting events.
Okay.
So you look at what is causing the what? The issue. You see, this one, let's say the warehouse was destroyed. Some inventories were destroyed. But the fire that causes the incident was not there. So you cannot go back and adjust. So it's a non-adjusting because the fire was not there before the fire. Yes.
Okay. So from that time that the auditor has not signed the financial statement.
Yes, you have not signed the report. Yes.
It has not signed the report. So that one still remain non-adjusting events.
Yes, it still remain non-adjusting event. But the auditors, you have to perform some procedures relating to the fire outbreak.
Okay.
See, it's a non-adjusting event, and the standard requires what? A disclosure to be made in the financial statement.
Very good.
Disclosure on the nature of the event, any financial implication, and any possible effect that you to have on the financial statement must be disclosed.
Yes, sir.
So the auditor, you have to perform procedure that the disclosure have to be made in the financial statement. So it's fire outbreak. So the management must state that on this date, fire outbreak occurred. That's the nature of the event. Now, some inventories value this amount was destroyed. Are you okay?
Yes, sir.
So even if you sign the report, and you issue the report and realize that the fire outbreak that occurred, even though it occurred, but it was not brought to your attention. That's the reason why the standard is saying that ISA 560 is saying that before the auditor, you will sign the report, you must actively look for what? Significant subsequent events. Are you okay, Syrian?
Yes, sir.
So you must look for it, because after that time, you have not signed the report yet. So you do inquiries, you ask people questions. This day that something happened, you do interview, inquiries, observation, inspection, and you do all those things. Because at that time, you have not signed the report yet. But immediately you sign the report, you cannot look for subsequent events again. No, because you have already signed the report. By that time, if let's say your attention is now brought to any subsequent event, and you realize that the issue will have an impact on your audit opinion that you have issued, you have to go back and do what? And discuss it with management. Are you getting me?
Yes, sir.
You have to go back and discuss it with management. Say, this is what my attention has been drawn to. If like I know that this will occur before I sign my report, it will have effect on my opinion. Let's say you issue unqualified report. That means the financial statement is true and fair. But you are now, the issue was not brought to your attention. But the issue now that is brought to your attention now, if like you have knowledge about it before you sign your report, maybe you might issue qualified except for. Do you see that? So you have to go back to management, discuss it with them. The financial statement must be amended. And you inquire from them, how did they want to address the issue? If let's say, okay, fine, we will amend the financial statement by disclosing it as a note to the financial statement, good. Then you have to go back and rewrite another audit report and give that report a new date. And let's say if the old report has already been given out to the public, you must find from management what is their step that they are taking to retrieve those old reports from the general public, because a new report will be issued now. Fine. If management say no, we will not amend the financial statement. What you can do is you can take legal action against them. Then you have to require that you speak at the annual general meeting. You tell the shareholder yourself that this thing require management have to amend the financial statement, but they say they will not. So you have to speak to them, the shareholders yourself. I hope you are okay.
Sir, you are perfectly good. You are perfectly good.
Okay.
I will talk to Linus to give you more bonus.
But you are not in the main class. Were you in the main class?
Oh, actually, I had some huge challenge, so that's my problem, of course.
Don't worry, you'll be fine. You'll be fine.
I hear you.
You'll be fine.
I hear you. Thank you.
Okay. So we are done with this one. So this one, the auditor have to perform procedures on the inventory. So you hold discussion with management concerning the inventory, that the financial statement must be amended, that they should go back and readjust the inventory value to 100,000 Ghana cedis. Then you review. Why am I even talking? Let me find out. What will you do? So I said the first one already. What else can you do? What other procedures can you perform? If you cannot say anything, then we move forward. Let's go to the next question, the last question. See the B part here. Describe the auditor's responsibility for subsequent events occurring the year-end dates, occurring between the year-end date and the date the audit report is signed. So this one, the auditor will have active stand. Just talk about it. You have to significantly look for subsequent events. Then the date the auditor's report is signed and the date financial statement is reduced, the auditors have passive. The auditor will have passive stand. So this one, the auditor, you don't look for subsequent event. But if the event is brought to the auditor's attention, that event will have caused the audit opinion to be amended, you go back and have a discussion with management. Let me look for one report question, then we are done. Okay, let's do this one. Let's do question 14. This is the last question. Then I'll talk more about. I'll not even say about. Okay, we'll look at public sector audit more. Then I'll release you guys to go and do your own revision. Okay, Auntie Agi, kindly read the question 14 for us.
Question 14. You are an audit manager in Bennis and Associates, a firm of chartered certified accountants responsible for the audits of Bellevue
If you are reading, we cannot hear you, Auntie Agnes.
Cool. With a year end 2014, the highest profit for the year of 80 million Ghana cedis. The audit for the year end is nearing completion, and several matters have been highlighted for your attention by the audit senior, Kwesi Esiedu. The matters have been discussed with management and will not be adjusted in the financial statement.
Auntie Agnes, wait, let's see. The first paragraph, what are they talking? Let's discuss it paragraph by paragraph, then we move forward. The first one, what are they saying? So you are responsible for the audit of Bayview Co. So their financial year end is 28 February 2014. Okay, so their draft financial statement recognize profit. So they make a profit of 11 million Ghana cedis. Okay, the audit is nearing completion, and these matters have been brought to your attention by the senior auditor, Mr. Kwesi Esiedu. Okay, so these are the matters. Okay, take the first one for us. Auntie Agnes, let's move on. Auntie Agnes, if you are reading, we cannot hear you. Kindly unmute and read for us.
Okay. The matters have been discussed with management and will not be adjusted in the financial statement. One.
Wait, what are they saying? The matters have been discussed with management and will not be adjusted in the financial statement. So that is the stand. So these issues have been discussed with management. At the review stage, these issues have been discussed with management. And management stand is that what? The financial statement will not be adjusted in respect of the following issues. Oh, really? Okay, let's see. Let's see the first one.
One, in January 2014, a major customer went into receivership. There was a balance of 2.5 million Ghana cedis owing to Bayview Co. from this customer at 28 February 2014, which is still included in trade receivables.
So this one, what should be the treatment? The customer's work, he went into liquidation, receivership. So this customer cannot pay. So the customer is owing 2.5 million. But the management are saying that what? They will not remove it from their receivables balance. So this amount should be classified as for bad debt. Is that not it? Should it be classified as bad debt?
Yes.
Yes, because they cannot receive it again. Cannot receive it. But this amount, is it material to the stated profit? So let's see, 2.5 over 11 by 100. How much will you get? 2.5 over 100 by 11. 2.5 over 11 by 100. How much will you get?
22.72.
22.73.
Yes.
0.7%. So it means that what? The amount is what? It's material to the stated profit. Is that what it?
Yeah.
Good. But why are they saying that they will not adjust the financial statement? They should adjust the financial statement. But they say that they will not adjust. Okay, fine. The second one, let's go.
A court case began in December 2013 involving an ex-employee who is in who is suing Bayview Co for unfair dismissal. Lawyers estimate that damages of 50,000 Ghana cedis are probable to be paid. The financial statements include a note describing the court case and qualifying the potential damage, but no adjustment has been made to include it in the statement of financial position or statement of profit or loss. Kwesi Esiedu has produced a draft audit report for your review.
Okay, wait. wait, before we go to the draft report, concerning the second issue, the court case happened on December 2013. Is it within the financial year? Is it within the financial year?
Yes, it is. It's within.
Okay, it's within. Good. So one employee is suing the company. Mr. Nathaniel,
Yes, sir.
it's like you are far from your device, so I can hardly hear you.
Yeah, it's true. It's true. I'm distracted with some other things. That's why.
Okay, all right. Don't worry. We'll finish in the next 30 minutes. Then you'll be free to do whatever you want to do. Eh? But we will need your attention here, please. So the lawyers were estimating that 50,000 is is probable. It's probable to be paid. So the financial statements include a note describing the court case and quantifying the potential damages, but no adjustment has been made to include the amount in the statement of profit or loss and the statement of financial position. What do you think should be the best treatment for the 50,000 Ghana cedis? Is the note disclosure in line with what? Which standard? IAS what?
37.
37. Is it in line with IAS 37?
Yeah.
No, I think it should be here.
Auntie Jennifer, you say what? Auntie Jennifer, we can hardly hear you. Get closer to your device and you can talk to us.
Sir, since they are saying, sir, hello, sir.
Yes. Auntie Jennifer, we can.
So sir, I was just saying provisions.
They should do what? They should make a provision.
I was saying, yes, please.
So a provision should be made. Is that what you are saying?
Yes, sir.
Okay.
Yes, sir.
Okay, who else? Should a provision be made or the disclosure that they have done is appropriate?
A provision should be made.
A provision should be made, Mr. Nathaniel. A provision should be made.
Yes.
On the basis that what?
So if you look at the recognition criteria, it is either it is constructive or legal, and if it falls in one of the two, is the amount measured reliable, and then is it probable?
Okay.
So they have stated that it is probable and the amount is measured is reliable.
So provision should be made. Is that not it? I also agree with the stance that say provision should be made. So if we come to provisions in terms of court cases, the decision normally should be based on what the lawyers are estimating, what the lawyers are saying. And the standard says that the amount should be measured reliably. Then there should be probable outflow of economic resources. And we are told that it is probable that the amount to be paid. And there should be what's the third one? What's the third criteria? There should be a present obligation as a result of what?
Past event.
As a result of past event. The past event is that they have dismissed the employee and the employee is suing them. So, and the lawyers are even estimating the amount and the probability is also there that the amount to be paid. So according to IAS 37, in regarding to the court case, a provision should be made for the 50,000 Ghana cedis and should be recognized in the statement of financial position as a liability and the statement of profit or loss as an expense. So they're saying that they will only disclose it. This management, why are they too no like that? The management, they are too no. Why are they saying that the adjustment they have made is enough? Which standards are they using? So let's see the report that the audit senior has issued. So we were told that Kwesi Asedu has produced a report, a draft audit report for your review, and extract of which is shown below. So let's see the report. Let's see what this man has put in the report. Let's see whether if Kwesi Asedu is on top of the work, and he will be able to give the appropriate audit report. So let's see. Auntie Agnes, read the report for us. Let's see.
Okay. Basis of opinion and disclaimer of opinion. We have performed our audit based on a materiality level of 1.5 million Ghana cedis. Our audit procedures have proven conclusively that trade receivables are materially misstated. The finance director of Bevue Co., Rita Gilmore, has refused to make an adjustment to write off a significant trade receivables balance. Therefore, in our opinion, the financial statements of Bevue Co. are materially misstated, and we therefore express a disclaimer of opinion because we do not think they are fairly presented. Emphasis of matter. Okay.
Let's discuss this one first. So what can you see about the first paragraph in the report? Basis for opinion and disclaimer of opinion. See the requirement too. The requirement says you should what? Critically appraise. You should critically look at it critically and appraise the proposed auditor's report. So that's what we are doing. So Auntie Agnes, what will be your appraisal of the audit report presented by Mr. Kwesi Asedu, the senior auditor? So what is your appraisal here? What is your comment? Auntie Agnes, let's hear from you. You are not appraising it. You are not looking at it critically.
Yes, please.
Okay. So you want
But the disclaimer, this one is just related to trade receivables. And I don't think it's pervasive, although it's material. So the disclaimer of opinion, I don't think it's the right.
I don't think you will not write. I don't think on the answer booklet. Or you tell the examiner, I don't think it is. Is that what you write?
No.
So tell me what you write.
Okay. So although the receivables balance is a material one, the auditor should rather issue a qualified opinion except for, but not disclaimer of opinion, since they have access to materials, and then the thing is not pervasive. It's always material, not pervasive. Yes,
Okay.
I'm done.
Is that the only thing you can see? You are right. That is there. You are right.
To add,
it's material, but not pervasive. So that disclaimer of opinion they are issuing is not appropriate. So the opinion should have been qualified except for the inclusion of the trade receivable balance of 2.5 million in the statement of financial position, which is a material amount to the financial statement. You are right. That will give you 2 marks.
First of all, the heading, the heading.
This one,
basis for opinion and disclaimer of opinion is incorrect.
Okay.
Yeah.
You have to state your opinion separately first before you come to write your basis for the opinion.
Okay. Auditors are talking.
So that one.
Okay. So it's not appropriate. We don't combine 2 paragraphs together. No. So you should have the opinion paragraph first before the basis for the opinion. So that one I can write it and get the 1 mark. Good. So I think this understanding, that's what you want to add.
Yes.
Good. So you add that one to it, you get your full mark. You get your full mark. So let's go to the next one, the next paragraph.
Ada.
Yes,
Good afternoon.
Where are you from?
I'm from church.
Welcome.
This I want to get some clarification on this except for and what that statement.
Why did you okay, you get it.
Is he qualified except for or unqualified except for?
It's qualified except for.
It's qualified except for.
Yes.
Because the reason why I'm asking is when there is no issue with the audits, sorry, the financial statement, we said it is we issue unqualified statement. Is that not it?
Yes.
So if the whole thing is supposed to be unqualified, and it is only some issue that is making it
not
to be given
to
a qualified.
Be,
it's only some issue that is making it to be a qualified statement. So I was thinking that from the perspective of English language, that it should be unqualified except for this particular issue. Difference.
Even
for the perspective of the English language, you have even brought in your statement alone through the whole thing. We are not doing English language. Who is that? All right, audit language. Let's go.
Auntie Agnes, read the second paragraph for us. Read the emphasis of the matter paragraph. And Auntie Agnes Adana. Oh, maybe she's
Hello.
Off. Yes. Who is that? Maybe she's off. Auntie Agnes is off. So okay, so she's back. Auntie Agnes, kindly read the emphasis of the matter paragraph for us. Okay. Somebody should read for us. Auntie Doris, can you please read for us?
Hello.
Yes.
Okay, I'm reading.
All right.
The view company is facing a legal claim.
Your voice is down, so kindly get closer to your device a bit. Your voice is down.
Emphasis of matter paragraph for an amount of 50,000 Ghana cedis from an ex-employee. In our opinion, this amount should be recognized as a provision, but it is not. We draw your attention to this breach of the relevant IFRS.
This auditor is a senior auditor. Zebas.
Also.
They said Mr. Kwesi, I said we be senior auditor.
Okay.
The man, what did they write? No, he just say the senior auditor. Maybe the man is operating for your audit firm. So what can you say about this one, the emphasis of the matter program? What is your appraiser? They say we should critically appraise it. So what's the appraiser? So what's the appraiser? But first of all, this one will be brought to the emphasis of the matter paragraph.
No.
Okay, so what are some of the issues that comes under emphasis of the matter paragraph? Mr. Roberts, we cannot hear you, please.
I'm saying that no, sir.
So it's not come under emphasis of the matter paragraph. Is that not it?
Yes, sir.
I was asking what are some of the things that will come under emphasis of the matter paragraph?
Okay, there's if there's a introduction of new IFRS, which have which I mean,
So Robert, your network is not helping us. Who is helping? Who is talking? Let's finish this in fast. This is the last question. Then we close. You go and do your revision. Let's keep the last one, then we will call it a day.
All right. So to me, issues that needs to be written under the emphasis of matter paragraph.
Okay.
Those issues or those disclosures that the accountants have made.
Okay.
But the auditors think that they should throw more light or lay more emphasis on it to the owners of the business. And those are some of the issues that come. But this one, already he himself is saying that the issue is not recognized. They think, or in his opinion, it shouldn't be recognized. And it was not even included in the statement of financial position. So even if he should bring anything on it, if the company is a listed company, then it should be under the key matter factors or whatever. Key factors paragraph. But if it's key audit matters are you?
But this one will leave come under key audit matters.
No, this is a provision. It's not a disclosure.
It's just a provisional. It's not an issue.
Yes, it's not an issue. So it's not, to my opinion, it should not featured in as other emphasis or even key audit matters.
Yeah. So
because it's a provision. Not have to read.
Which needs to be it needs to be recognized.
And so
yeah.
Yes, so you should just issue a statement of I mean qualified opinion except for.
That's what I want you to see.
Yes.
That's the second one. For each of the two events, describe the impact if the issue remains unresolved. So first of all, this issue does not even require an emphasis of the matter paragraph. No. It's just a provision that should be made, and the provision was not made. So this one, the auditor should just modify his opinion and just qualify the report except for. That's all. So bringing it under emphasis of the matter paragraph, it should tell you that the senior auditor, Charlie, the man, you have to come and learn. You have to, is he qualified? Maybe he's not qualified.
You have to write another CA paper.
Maybe he's not qualified.
Yes, I'm sure it's not qualified.
Maybe he's not qualified. So
you come and write advance audit.
If you come and write advance audit, he'll be okay. It should come. So we are done for the day. Go and do your own revisions. Public sector auditing, I told you. That 20 marks, that's the mark that will help you to pass the exam. So I don't have any question on the public sector. But I'll be saying it, no duties and responsibility of the following bodies. I'll be saying it. Try and read all the past questions from the beginning of this syllabus to date. Read all of them. Read all the past questions. The question that will come, it will be any of them. It will fall under any of them. So read all the past questions. I don't know which one. So read all the past questions on the public sector audit. That is your question 4. Question 4. Question 4. Read all of them in the past question. And you'll be fine. And you'll be fine. If there is no question, then I'll release you guys to go and continue whatever you are doing. Any question?
Sir.
Yes, senior.
Please, the into side and then the side. I don't know.
You don't know what?
What does it? I know that it's a supreme audit something, but
supreme audit institution.
Supreme audit institution.
And in Ghana, you don't know the institution that is called a supreme audit institution.
Parliament.
The audit service.
Hey, Cephas. Cephas. You know me, oh. Did you just say parliament? Yeah.
It's the Ghana Audit Service. It's the Ghana Audit Service. It's the Ghana Audit Service. This one is being represented by what? By who? The Auditor General, eh? It's the Ghana Audit Service. The Ghana Audit Service. Then the Auditor General is here. So I think question that came in last night was on Auditor General. Is that not it? Question like quality control, something like that.
And then the man is giving 2 years.
That is not my concern. Johnson, I see. Is that
Which man?
Rich man?
Your man is giving 2 years extension or offer. How for do?
I mean, the clearing agent man says you should continue for additional 2 years.
So how can the sack Dominic away then can't give another 2 years extension?
Why? You go talk that thing for you today.
Master, what be your problem?
What about
that? My problem is ethical principles in the audit service. Hey, I hope you get lawyer. I mean,
I know they part.
Master, you are part. Are you not the one who is hosting the meeting?
What is the full meaning of the INTOSAN? The INTOSAN is what? International what?
Organization of Supreme Audit Institutions.
So know their responsibility. I'm sure they're in the manual.
So basically, they regulate the size, the Supreme Audit Institution.
Oh, yes. So I don't think there should be any issue with them. No.
Is the IAA is what?
The what?
Internal Audit Agency.
IAA. Internal Audit Agency. Internal Audit Agency. The PAC is what? Public Account Committee. This one is the Controller and Accountant General. So we are done. I believe there is no question again. So, and this is the last meeting we are meeting. You have a full week to prepare yourself and go and justify your inclusion come July. If no question, then we end the class here. I believe that there are no questions.